Hello everyone, I'm Dr. Stock. This video is for entertainment purposes only. Today I would like to talk to you about some of the differences that I've seen within the stock market. In some areas a bloodbath, and in other areas we had a fair amount of green and we had some really good moments in the stock market. It was really crazy to just watch it all unfold, especially when I was looking at my growth portfolio compared to some of my other portfolios. It was just crazy. Love to talk about it, so without further ado, let's get ready to rock. Welcome back. If you guys are interested in joining my Patreon, where I share my growth portfolio, my dividend portfolio, a weekly watch list of stocks that I think are going to be interesting for the week, that link is down in the description. I got a bunch of people over there. We're nearing that 100 mark. We're growing all the time, and it's getting more and more interesting all the time, and I really am enjoy offering more features as I learn more about managing the Patreon, and the feedback that I get from people is absolutely wonderful. So I'd love to hear about that, and I'd love to see you over there. That link is down in the description. Also down in the description is a link for Webull. By signing up and depositing $100, you get 2 free stocks valued anywhere from $10.50 total up to $1,850 total. So if you're looking for a trading platform, it helps out the channel if you use my referral link in order to do that for Webull. That link is also down in the description, so thank you ahead of time for that. Finally, if you haven't already, subscribe, hit the like button, hit the notification bell, share it with your friends. Let's get on to the stocks. So the stock market today was just crazy for the speculative plays. There was a lot of red to be found left and right. Do you hold on to those companies? Do you sell those companies? When you see red like that, you end up getting a lot of panic selling, and there's some places where that might be merited to go ahead and sell because maybe it is game over for that stock, but more often than not, especially for the really solid speculative plays, like one of my favorites that I've talked about previously is Skills, ticker symbol SKLZ. It's a company that I really strongly believe in the fundamentals of, and they recently made that deal with the NFL for developing games that not only do the developers get money for people playing their games, but also the players who play those games, the winners, get money from that. And Skills gets money as a company, and the NFL, but also in the multi-year deal that they signed, they would get money for that. So I think that the NFL was just a foot in the door kind of company, and I think that others are going to follow in their wake. But Skills still was overvalued by present value standards, but its future value, its potential based on its fundamentals, I think that they still have a lot to be realized yet. So to see it down near that $30 mark when it was up at 46, and I thought 46 was a little bit too high too fast. I expected it to come back down to just below 40, but stay in the high 30s. And then the contraction that we saw recently with the big sell-offs that we saw with the different spec plays that are out there, we saw a lot of red, and this certainly wasn't one that was immune to it. And there were other companies that I was in, and of course the smaller and more speculative they were, it seemed to be that the harder that they took it. BNGO is another one that I talked about. I think at one point in time I looked, and I'm not certain because I looked at a lot of different numbers today, but I think they were down to like 25% or something today off of where they were at before. So a lot of people are just like, what is going on? Well, if you're really focused on those growth stock plays where you're looking at future values for the companies rather than ones who hold strong present values and are really performing presently, yeah, there was a lot of red to be seen. But if you take a look at my dividend portfolio, the dividend portfolio is still rock solid. That one hasn't moved much. I just purchased the shares for that Patreon shared dividend portfolio back on February the 1st, and got all my materials ready and got the spreadsheet all worked out for everybody and got that posted the other week or so ago. And so that's been there waiting, and that one, there's a lot of really solid gains from February the 1st until now versus the growth stock plays where a lot of those gains that we saw from January into February got erased, some of them back to where they were at in January, some of them below where they were at in January. So that's one of the big differences that we see, is that the companies that would be dividend worthy, the older and more established companies, they're just not taking the current market conditions as hard. So when you're looking at the stock market and you're looking at your own portfolios and your own holdings, the money's moving to the value stocks and the dividend stocks and places where people can realize more potential now versus keeping their money tied up in overvalued speculative plays. So to do that rebalancing, I think it was a good time to rebalance. I didn't want it to be as big of a correction or as a pullback as we're seeing. I don't know that we're seeing a market crash. I just think that really those values are shifting for us, and they're shifting in a really heavy way, don't get me wrong. But it doesn't mean that the companies, if they are strong fundamental companies and strong growth plays, it doesn't mean that they're down and out for good. It just might mean that they're down for now. So I made a bunch of different purchases today, making sure that I had cash on the side ready for a day like today. Doing my dollar cost averaging, I didn't take thousands of dollars and dump it into any one area. I took small amounts of cash and spread it out across different stocks that I thought still have a lot of strength, and took advantage of reducing some of my cost bases and even opening some new positions as well for companies that I was looking for opportunities for, but I just missed the boat. They slipped right past me, and with the market coming down like it did, it gave me an opportunity to buy in at a level that I was comfortable buying in at. So let's take a look at just a few of those companies, and you get to see what I mean. All right, so the first company that I want to look at is Skills, and when you look at the graph for Skills, it had a decent run up. It had this huge gap up with the NFL news that came out about the multi-year deal. People got really excited, and then it's just been trailing off since. And then this is the daily chart, by the way. Over the past couple days of red, you just see it falling, and then finally a big gap down today. We did get a green bar out of it, but it's still down below where it closed the previous day. But what I want you to look at, let me grab my drawing tools. So when you look at this and you see how this thing dropped, if we we'll average in a line there a little bit, just for a little bit of linear regression right across the bottom of this thing. If anything, it was up above where it should have been, and this looks more like it's on a more corrected path now. I don't expect there to be a lot more falling with this. If it does fall, I think it's a huge buying opportunity for myself, and it's one, because I've done research in this company, that I would definitely be buying a lot more into. Right now I was already overweight. I like the position that I have. I'm still green on this one, and I just think that as that potential gets realized, we're just going to watch this recover with the markets, and I think that more excitement will come back into it, and I think that we're going to get positive news and really positive earnings quarter after quarter. I think that there's a lot of growth ahead of Skills, and I think that the market that we've seen on it so far is more of a corrected view of what we can expect for Skills going forward. Just down to the intraday for a moment, down to the 30-minute, you can see the sharp drop that it had down to $27, and I actually saw it just for a little bit when that happened. Unfortunately, I wasn't able to buy in at that time, but had I been able to get a hold of it at 27, I would have really loaded up, even for just some of that position being a short-term holding, because I knew right off the bat that this market was going to recover from that sharp pullback, or from that sharp sell-off that we saw with a lot of these stocks. And if we look at that across a lot of other stocks, when it comes to the growth type stocks like this one and the speculative plays, the market open and just after the market open was not very kind to these stocks. It did recover throughout the days for most of them. The next stock is SBE, and you can see from the daily chart that SBE had a heck of a go of it recently, with the first attempt at getting enough of a vote for the reverse merger with ChargePoint going through. It didn't happen. There wasn't enough of one. They said, well, let's adjourn this meeting. We'll meet up again on the 25th of February, which is this week. It happens on Thursday that they go back, they vote again. I know that I put in my votes. I know people in the Discord and my Patreon, they also put in their votes if they were ones who held positions in this company. I think December 16th was the date for that one. That makes you eligible for being part of the vote for the reverse merger between Switchback and ChargePoint. So to watch this go, hang around the $40 mark or just below the $40 mark for a while, and then hang just between the $35 and $40 mark a little while after that. It really held its bottom, and then today, I mean, just so much red, but then there's so much of a correction. This pulling down, if I look at the low price, $26.73. That's, in my opinion, because I'm an investor in SBE and I plan on holding it even while it's ChargePoint. In my opinion, that is a dirt cheap price for anybody who wants to be part of ChargePoint. So because that is my opinion, I decided to hold on to my position for what I have right now. And I did see this one when it was at $31 today, and I was like, wow, that's that's really cheap. And not much has changed about ChargePoint, but again, it's a speculative play. There's not the money in it right now, and if the price is already inflated and people are looking for making more money, well, it's not going to be in the stocks that are already inflated. It's going to be moving out to the value stocks and to the dividend stocks where they actually stand to bring that money in. Once we see that money fleshed out, well, then we create buying opportunities. I think the money's going to come back into these stocks. So it's just a matter of playing that waiting game to find out when that's going to take place. I think by Thursday, well, as early as tomorrow, but more likely Thursday, Friday, we'll start to see some money more strongly coming back into the companies that have strong fundamentals. So just a quick look intraday for SBE as well, and you can see that sharp sell-off that it had right at the beginning, and then it recovered a little while later, and then went more or less sideways, comparatively speaking, to what else happened earlier in the day. And so we ended pretty quietly at about $33 per share. I don't know that we'll see a lot of movement should the merger end up going through in the near term, but I think over time, as they build their infrastructure and as ChargePoint matures as a company, I think that we'll see more movement with the price going forward. All right, and the last company that I have to share with you is Open Door Technologies, ticker symbol OPEN. And for this one, this is one that I liked when I read about the company, and as I was researching it, that's about the time that this thing really blew up, and it kind of left me in the dust before I was ready to pull the trigger on it. So we can see that volume spike happen, and it ripped up almost to $40 a share. And I was like, well, I don't know that price is for me right now. It's a little bit too run up. Maybe if it comes back down, I'll reconsider buying in. And today ended up being that buying opportunity for me. I really like Open Door Technologies. I think it shares a nice part of the market space with Zillow. I still think that Zillow's the number one, but this allows me to have just a little bit more exposure in another company. So coming in under $30 per share for Open Door Technologies, and again, if I put a drawing on this one, right across the bottoms, you can see that you can see that this follows more of a natural progression for this stock, at least off the minimum values, and that's for me a time when I would like to buy in versus a time when it would be elevated like it was around the time that I was going to buy in originally, or when I really started becoming interested in the company. So I nibbled on a few shares of this because I think that it's done with at least the big drops for now, because I feel like it's at more of a minimum price compared to where it was before. Just a quick look intraday to see what was going on with this price. We can see this double bottom that we have on the 30-minute chart at about 26.40 or so, and the only time that we went lower was at the open and went all the way down to about $25 a share before coming back up again. And besides that big drop, and then we get to that bottom, and then the bulls came in, and we also had some recovery in the market, and so this stock recovering right along with it. I think other people are seeing buying opportunities for companies like this coming back in and finding really good price points. So let me summarize. The markets, if you're well diversified, there's some areas where you had really decent days the past couple of days, and other areas such as the Spec plays where it didn't go so hot that those stocks have really fallen off, that the money moved around to other parts of the market. If you were overbalanced in those speculative plays, well, it could have hit you fairly hard recently. I know that my growth portfolio has taken severe hits to it, but again, as I said before, the dividend portfolio that I offer over the Patreon, it didn't really feel the same pains because they're older, more established companies, and they aren't shaken as easily as we have for these other stocks. So do I think it's an entire market crash? I don't think it is. I think that we have a rebalancing, and I think we have a correction, but at this point I don't think that we have a crash in the market. It just can't go up all the time, and we were reaching some levels of gains that were just unsustainable. So after this most recent day in the market and all the red that we had with the Spec plays, I think that people are looking for buying opportunities coming back in, that we're starting to see the buyers come back in for more reasonable values for the different stocks that we have for those growth opportunities, that now maybe there will be some room for growth for those companies that have strong fundamentals but haven't quite put out the numbers yet. Skills, Still one of my favorites. I really like it, and I'm not discouraged by the price action that we saw today or recently. I think that it's going to go right back up, especially with good financial news and more companies establishing partnerships with them. SBE, I think it's a long-term play with ChargePoint, that as they build that infrastructure and that green movement that we have that may have been suppressed lately by other market and economic concerns, as that comes back through and as that comes back around, I think we'll see strength come back to companies like SBE, and we'll also see more of an increase there as well. And finally, Open Door Technologies. It's a real estate play. It's also one that ARK Invest is in, and one that stands to transform the way that properties are bought and sold via the internet, and anything to simplify that process. The one hesitation that I have for taking a larger position with Open is that they're not as transparent about what they do when it comes to flipping houses. So I think that there's some numbers that need to come out yet about what they're spending in order to turn those houses around and getting them ready for sale. And as we know more about that, then we know more confidently how to invest, should we want to be investors in a company like Open Door Technologies. So that's what I have for you today. I hope that you found it insightful. I hope that you enjoyed it. If you would like to join me at all in my Patreon, that link is down in the description. Same thing for Webull. The link is down in the description if you want to sign up and get your 2 free stocks and support the channel. I always appreciate things like that, and I'm infinitely thankful to the people who have supported this channel so far. It's been a lot of fun. Finally, if you'd like to, if you haven't already, subscribe, hit the notification bell, hit the like button, share it out with your friends. Remember, this is for entertainment purposes only. Always do your own research and due diligence. Contact a financial advisor before making any financial decisions. I'm Dr. Stock. Thanks for rocking with me. Now go get that money. Oh, he's camera shy. Come on, Ben, you can do it. Maybe Diego? Where's Diego?
He's over there by the chairs.
No? Come here.
I'm not really that into it right now.
What do you think, you big fluffy boy?